Look at that 10-year yield, 3.21%, wasn't it just 3.17? A divided Congress could drastically change the landscape of investing, healthcare, energy, tech, autos. How will they likely be impacted? Treasuries, munis, interest rates, even trade would be flying around if winds of change sweep through the halls of power. So, as we help you plan your midterm, post-midterm portfolio, we bring in Fox News contributor and former UBS of America's CEO Robert Wolf, and from Washington, Raymond James Washington policy analyst and all-around smarty pants Ed Mills. He also worked on Capitol Hill. Tell us about that.
I was there for almost a decade. It was a great time.
Okay, so I'm sure you know all about the lobbyists, which tend to throw a little bit of a wrench into things, but that's a whole different story. Let me first get to Robert, and you tell me what you think, which sectors you believe will be moved around depending on which way the political winds blow. Robert.
So I think that I would look at the two big bookends being the environment and healthcare. If the Dems take the House, obviously there could be a rollback in regulation, things like climate change, things like the energy sector, those could be impacted. Renewables will do better. Oil, I think, would do worse. I also think there's an outlier that you didn't mention would be financial services. You could see Maxine Waters take over financial services, and then all of a sudden you could see, some of the regulation be unwound that, everyone was so excited about. With respect to health care, I think a lot of it has to do with governorships. There's a high likelihood that Dems win somewhere between 6 and 10 governorships, which could put them 25-ish governorships, and then therefore that should do well for health insurance companies. Okay, health insurance companies. Ed Mills, when you are telling everybody over at Raymond James how you anticipate things will turn out and then how to invest in them, have you made some moves already, and if so, where?
Well, what we've been looking at, I think, is, kind of the things that you've discussed here. In financial services, you're going to have an increase in headline risk, but there's really not going to be any new legislation. And the regulators that are bringing about this deregulatory environment are going to be in their seat regardless of the outcome of this election. The one area that we do think there's going to be absolutely a lot more scrutiny on is tech. We have an agreement on Capitol Hill that something needs to be done. We don't know exactly what they want to do just yet, but when we also add in the China trade fight, tech is at the center of that fight as well. So either from Capitol Hill or as a collateral damage in the trade issue with China, tech is in the crosshairs here in D.C.
Robert, what do you think about that?
I would agree with him. I think both sides win by going after Facebook, by looking at antitrust with respect to the Amazon. Should Google and should Amazon, should Facebook, should Twitter be regulated like they're a publication firm or a media firm? There's no question they're an easy target.
That would mean that the stocks would get damaged and dinged.
Well, I think that's what he thinks.
So
he
would stay away.
Crosshairs.
Well, then to this point, what about auto stocks? This is a sector that was, it was saved, basically. It was bailed out like the banks. And Ed Mills, first to you, what do you think about auto stocks as they really have found their footing since the financial crisis?
Yeah, I think this is a debate about two things. One, environmental regulation. What we have seen since Trump has taken office is that they removed a lot of the regulations related to CAFE standards or the miles per gallon that the fleet needs to have. If that were to be put back into place, I don't think it does, but if there's concern, that could impact auto stocks. There are the steel and aluminum tariffs. If Democrats take control of both the House and the Senate, there will be a debate whether or not Trump went too far on some of these tariffs in that those Midwestern states push back. And so if those removed, that's a positive for those stocks.
In fact, Robert, we're hearing from General Motors that their costs have gone up because of the steel tariffs. So how does that all play in when you're looking at whether to invest in these names?
I think autos is going to have a struggle in 2019. Ford announced lower earnings and thousands of people in layoffs. The tariffs have impacted them dramatically. GM had good earnings, but not because of auto sales, but because they sold higher margin SUVs. If gas prices go up, and if we have a rising interest rate environment, one of the sectors that gets hits the most is the auto sector.
Infrastructure. Ed, give me your thought on that, because this is one where both Democrats and Republicans agree. They want an infrastructure bill.
Yeah, it's one of the few areas where you generally get bipartisan compromise. In a divided government, one of the things that you can usually bet on is that both sides are okay to spend money. We believe that, the 2018 election here could be seen as the rise of the herbal Tea Party on the left. They're going to want to have something to show for the constituencies. I would be looking to a potential gas tax as a pay for. Deficits sometimes matter, but when they're dealing with infrastructure, keeping people employed, getting those big public works projects done, deficits generally don't matter on Capitol Hill in those instances.
Robert, I didn't expect to go there, but Donald Trump has said he wouldn't think too badly against a gas tax, which we haven't seen since the 80s and Ronald Reagan.
So infrastructure is the fastest multiplier of GDP growth. For every dollar, it's a 1.7 times multiplier. I helped write Obama's infrastructure plan and testified in front of the Senate on it. I'm a huge proponent of infrastructure. It's a great public-private partnership. But the Democratic perspective on infrastructure is much different than President Trump's. President Trump's is much more about real estate development, whereas the Democrats is much more about renewable energy, fiber, social good like changing roofing with solar, and it's just, they're totally two different infrastructure plans. I think they could come together because it's the only thing that's bipartisan. Unions like it, the Chamber of Commerce likes it, Democrats like it, Republicans like it. We should have an infrastructure plan. It's decades old.
Yeah, and please fill the potholes in New Jersey on Route 17. I just can't take it. Ed Mills, when we finally finish up, I have to ask you about the deficit. Do you even think about that as you're talking to the gang at Raymond James, or is it just some kind of wiggly ghost-like thing that nobody really worries about?
No, everyone worries about it. Everyone campaigns on it. But one thing that I have seen through my near 20 years here in Washington, D.C., is that people really care about the debt and deficit when they're in the minority. Once they get into the majority, they want to enact their plans.
Right, Robert?
Amazingly, I am more fiscally conservative than the fiscal conservative hawks. It's amazing, but that is true. It took a decade.